Hello guys, as I told you last video, in this video I will show you what do we mean by industry rotation. It means why these industries are rotating uh, and what is the reason in general and how we can take profit from these industries to search for stocks. This is the most important thing that we are going to see in other videos. But this video, I'm just trying to show you and to explain. Okay, so let's go to the explanation. Okay, so what is industry rotation? To make it very simple, okay, let's say today, just to make an example, let's say today, this is the day, we are in 28 December, okay, 2017, okay, we have, I will try to show you two charts, okay. This is the day they begin, okay. A chart is going like this until, let's say, from 28 December to 28 December 2018. Just an example, okay. We are not in 2018, we are, let's say, in 2017. Now, what makes this industry with its stocks going up? Okay? Now, we find another trend which we take the same date. Okay? It's going down. And it is the same 28 December 2018. So the question is, here is, I just make a line here, okay, just to separate these two, because this is the day from 2017, December 28, this industry is going up, the other is going down. Now there is here what we call industry rotation. So to make you understand, if we speak about mutual fund managers, okay, they have money in this industry. In this industry here, they have money. They have been investing for this for 1 year, let's say from 2016, and it was going up. Okay? So what they do, they begin to sell and buy the other one here. Okay? So when they begin to sell, they take this money and they put it here. Now, this is what we call industry rotation. It means there is no, as we have seen, there is no industry that goes for 10 years going up. There should some time when it stops and it's going down. Now, when there is going down, there is what we call a sell-off. But understand that the mutual fund managers, they have millions of shares to sell. So they don't want to sell it in 1 day because it will be clear that there is a problem. Or they don't want to sell it in 1 day, to buy stocks in 1 day. They can't do that because they make the people know what the mutual funds are doing. So they want to keep it secret. Now, how do we know, like as traders, that there is a move? It's just the price. Although when the thing is moving, we don't know when it stops, but we know at least that there is a buy here. An industry is going down. We know that it is going down because there is a sell-off. there are millions of shares sold, and you can just check the stock, check how many, the volume each day, and you see. Although they don't give you the how much it is bought or how much it is sold, but where there is a supply, a lot of supply, the industry goes down. Now the other industry, it has more money. It means there is a big buy. Now when there is a big buy, what will happen? A lot of people come here and buy. It's not only the mutual fund managers alone, everybody. Now I will explain right now what are these people that come. Okay, just to give you an idea how these things work. Okay, so if we speak about let's say, if we speak about buy, now who buys? Now, just to make it like this is better. So, excuse me. Now who buys? Now you can find mutual fund managers. These are the big movers. Okay, let's say it's one. Now, second, we find swing traders like us. Sorry for that. Like us, or what we call short-term traders. Okay, short-term traders. Now, three, you can find hedge funds managers. Four, you can find banks buying for their clients, buying for their customers and clients. You will find five, brokers also buying for their customers. And six, you find, for example, big investors. Let's say we take Warren Buffett as one of them. Okay, just an example, but it doesn't mean that he will buy all the stocks or whatever. Seven, now day traders, they can push the price up if they see the price is moving up. Okay, so it means they help. And there are others, eight others. Okay, others like insurance companies, or pension plans, or any investment institution. Okay, any investment institution in general. Now this are the major guys who push. Let's say here we say these they push the price up. This is when there is what we call uptrend. Okay, there is an uptrend. It means this is where the guys are pushing the price up, and all these guys are pushing the price up. Now, so the mutual funds are not alone who push the price up, but the mutual fund managers are called the market movers or market mover. It means they themselves, they move the market. Any industry, it means when these guys are buying, you can't stop them. You can't, for example, hedge fund or swing traders or brokers, they come to these guys and they stop them when they are buying. Why? Because they have billions of dollars to spend for each stock. It's not 1 billion or two. There are some mutual fund, their assets are 1 trillion dollars. Okay, 1,000, 2,000, 3,000 billion dollars. It means they have a lot of money and they can push everything. All the others they can do push the price, but in general they are weaker than mutual fund. That's why I put mutual fund managers. Now swing traders like us, it means like we are here. We are what we call the short-term traders. We are here. We will move and we help the price move up, okay? And when the mutual fund managers stop pushing the price, we exit, okay? And we just exit. There are some banks, brokers, investors, they stay, as I told you, as I showed you before. When the stock, let's say the stock is going up like this, and then it stops, and then it's going down. Some people, they stay here. They stay because they are investing for 1 year or 2 or 3, okay? So for us, we don't want to lose what we got. So it's not a good thing. That's why we have what we call the exit point or exit plan that we do whenever we see the stock is not doing well, so we exit. Okay? This is for those guys who push the price. Now let's say it is now the opposite. Okay? Now all these can be the same guys who push the price down, but I will give you more information about the people who push the price. So those who sell shares, okay, when there is a downtrend. A downtrend, as I told you before, is when people begin to sell. Now we begin with mutual fund managers. They begin to sell off because these guys, they can't short stocks. So no shorting for them by the law. No shorting for them by the law. They don't short stocks, because if they short stocks, all the market will disappear if they short stocks, because they have billions of dollars and no company will be in the market. But there are others who help and they push the market down because they are making money. Those are hedge funds, and this is the dangerous, because some hedge fund managers also, they have billions of dollars to spend, okay? So they have billions of dollars to spend. That's why most of the time they short stocks that they see going down, and they understand that there is a big deal. If the mutual funds are selling, the hedge fund, they come in order to put this stock down. And for them, there are these two actions that you can see. Just I will explain these two actions in order that you have that you always ask why. For example, stock is going up, it stops, and then it's going down very quick. Now this very quick action of going down, it has two actions. Now selling off, it means people are selling off their shares they own, and shorting. Now in shorting, okay, everybody can short except for mutual fund managers who by the law they can't short. So that's why hedge fund managers and all the participants of the market can short, especially day traders. Day traders, each day they find stocks that are going down, they short them and they make money. That's why the action of shorting down is very quick. And that's why when you make money, you make 100% in 6 months. An example, it could be just few days and all this 100% will be lost if there is a very aggressive selling off and shorting and all the people they short the stock. Okay? And all the other participants they can short, so I don't want to put the list again. Everybody, banks, brokers, customers, or anyone can short, okay, who are traders. But the only people who doesn't short is mutual fund, because if they do, the market will disappear. Okay, so that's why the law doesn't give them the ability to short. But hedge fund managers have the ability to short, and they have billions of dollars. That's why when a stock has problems or begin bad news, these guys they jump and they begin to short. If there is a sell-off, this stock will go down so quick. Okay. So this is just to show you what is this industry rotation. There are a lot of participants. Now you ask me the question, how can we take advantage of that? Is just the beginning of this action. It means you should know the beginning of either the stock is going up or the industry is going up, and or the opposite, when an industry or stock is going down. There are techniques that are very simple you can use. If you go, for example, to my training for shorting, you will find the techniques there, and you will find the risk and so on. Now, if you are going from the bottom, for example, like support line, we have training level 13, or training level 2. When you go long when you see this. So this kind of searches, okay, either when the stock is going up or when the stock is going down, is very simple. It has only some techniques, some criteria. When you do on the chart as criteria, it will show you if this stock is going up or it will go down. But understand that it is not 100% sure. That's why we have losers and we have winners. Okay? So in next video, I will give you another aspect to see the industry, and we see the stocks, and we try to understand why some stocks go up, some stocks go down in the same industry. Okay? It means, why is that? Okay? Thank you very much, and follow me to the next video.